Yo guys, FFX, welcome back to another video, another session, another something. Yeah, so we pretty much going in details when it comes to the quarters theory, right? The algorithmic principles based on time and price. ICT Concepts. Shout out Daya for refining everything. But yeah, what is called the theory, right? It's pretty much algorithmic price deliveries in which price tends to react off based on time and price. In simple terms, it's three phases heading into four phases of price distributions. For example, the first phase is accumulation, second one is manipulation, third one is distribution, the fourth one is the continuation, reversal on accumulation, right? And thing is, this is visible across all time frames and all asset classes, if that makes sense, right? So on higher time frame, it's fully defined as seasonal tendencies, right? So in simple terms, what we can do, right? We can divide our full year range from GBP USD. Can use any pair, for example, right? We're gonna be going to the 1st of January to the 1st of next year's January. This is our full day or full year range, right? So we'll define this as a full year range. I'm just gonna rename it like this: 2023, right? So what we do, right? We divide this full range into quadrants, if that makes sense, right? Something like this. And generally, every 3 to 4 months, price will tend to change in market delivery. For example, the first one is Q1, right? The second one is Q2, third one is Q3, fourth one is Q4, right? If you want to refine this, we would say the first one is accumulation, right? Let's make this black like this, right? Second one is manipulation, right? The third one is distribution, right? The fourth one, we got that as X because it's either continuation or reversal of the previous one, right? So if you can pay attention, the first value range within the first quarter of the range would be our accumulation phase. We'll make this gray. Yeah, I think gray is fine. We'll make this gray like this, right? This is our first quarter range from here all the way to the 3rd of April, right? Then our second phase would be this range from here to 3rd of July. This is our manipulation phase. We can make this red, right? Then now heading into our our third one, this would be our manipulation phase. Let's make this light green, right? And then our fourth one would either be a continuation of the previous one or a reversal, if that makes sense. So yeah, we got three accumulative ranges, and the fourth one is either continuation or reversal. Our first one is gonna be called Q1. Let's do it like this. Top, right? Okay, we'll say Q1. That's our Q1 range, right? Q2, we'll place that at the top. The top. Q3 is our, let's make it like this. And then Q4, either continuation or reversal, right? Call this Q4. These are pretty much the characteristics of the quarterly theory based on time and price, right? Meaning that when we expecting specific setups to form, right, we're expecting them to form within this criteria, or this should be in confluence with what we're anticipating within price, if that makes sense, right? So if you can pay attention, currently we are within the fourth quarter, which is a continuation or reversal, right? So right now I can even remove this, and then I'll mark out the last quarter, which is from the 2nd of October specifically the 1st of October, right? Would mark that out as Q4, right? We can remove this. This is our current trading range, if that makes sense. So we can remove all this, right? Now I can scale down to a lower time frame. I'm gonna go to the 4 hour. It's fine. Now let me go to the daily, right? What we do is we divide this into quadrants, if that makes sense, right? We divide it into quadrants like this. And our first quadrant is our accumulation, if that makes sense. Meaning that this range from here all the way to here, that's our manipulation range. And by the way, guys, there's no shortcut into learning this. So everything is specific. So make sure you watch everything, because you'll get lost if you don't fully understand what's going on, right? And then this right here, our current phase, we're currently within our manipulation phase. That's why we're seeing price grow higher. So the chances of us seeing lower price is very likely heading into the third quarter of this range, right? Because like now we're moving higher, and if you can pay attention, the Q1 buy side, we'll say buy side liquidity has been swept, right? So what do we tend to, once buy side is swept, we anticipate price drawing lower, and it needs to pretty much provide us some form of displacement within the highest current price range, if that makes sense, right? So if price was to draw lower within this range right here, where would I say I'm anticipating, or I'm looking to see price draw lower from? Right now, if we can go into the weekly time frame, right? Currently, we have this weekly fair value gap right here, this CB, sell side imbalance, buy side inefficient. CB slash CB slash fair value gap, right? So when we reach fair value gaps like this, we believe that it's gonna be supporting lower prices unless price closes above them, which would make them invalid, making them inversion fair value gaps. So right now, I would say we're still bearish, if that makes sense, right? So hopefully this all makes sense, right? This is all the way from the weekly. Now we're going into the monthly, right? This is now what we can do. I mean, all the way from the yearly, we go into the monthly. So currently, I'm gonna use October, right? I'm gonna be utilizing October's range, which is from October to all the way to this right here, this full range right here, right? With the benefits of hindsight, right? I'm gonna be going into details because this alone would be regarded as Q1, if that makes sense. That's our accumulation phase. We divide it into quadrants and all that, right? So we do the same thing from the yearly. We do the same thing to each and every month, right? And the first we got, okay, in simple terms, we got 4 weeks within a month, right? NFP month, which is the first week of every month, right? That's our accumulation. The second week would be our manipulation. Heading into the third week, we expect some form of distribution. And then the fourth week is either going to be a continuation or reversal, if that makes sense, right? The same concept is utilized for daily data, if that makes sense, right? For example, in simple terms, we're going to try focusing on last week's price range, right? I'm going to remove everything. Hopefully this makes sense and I'm not losing anybody anyway, right? Monday, Thursday, Wednesday, Monday. Monday open was right here, midnight, right? And then Friday's close, which was today's Monday's open, right? What's that here? What's this right here? So this is our dealing range for the previous week, right? So same thing. How this one actually works, right? When we utilizing the weekly profiles is that we count the quarters theory based on the first 4 days of the week, meaning that from Monday to Thursday. Monday will generally be our accumulation. Tuesday, our manipulation. Wednesday, our distribution. And then Thursday, a continuation or reversal. So we'd mark out the range from Monday open, right? Heading into Friday close, right? And then we divide this range into quadrants like this. Like this, right? So right now, let's even use bar replay just to keep things clean. Nah, let's rather not. Let's rather not, it's fine. It's still gonna make sense. Okay. Our first quarter, this was Monday, right? This was our accumulation phase, our accumulation week. No, another thing that you'd want to do, right? You'd want to drag this all the way to the previous day's Asian session open, which is 6 a.m., because that's the beginning of our true day range when we're in correlation with time and price, meaning that would move this from midnight all the way to 6 p.m. New York time, right? And then this is our quadrant range, right? So meaning that each and every day would begin at Asian Open, if that makes sense, right? And then we divide each and every one of this into quarters, if that makes sense. So let me just do that right now, real fast. Okay, now we've divided each and every day into quadrants, right? Monday is our accumulation, Tuesday is our manipulation, Wednesday is our distribution, and then Thursday is our continuation or reversal, right? So generally, how you actually utilize this is that you would look to refine these ranges into like minor segments, whereby now Tuesday tends to form the high of the week, right? And then Thursday would tend to form the low of the week, right? This is where weekly profiles tend to form within, right? And we're utilizing this as a form of indication of which profile are we actually anticipating price providing, right? So if you can actually pay attention, this bullish range right here was a manipulation, right? Then heading lower to this range moving lower was our distribution. And then from Wednesday, right, heading to Thursday was our reversal. So this entire range was our accumulation. This is how you refine price, right? But like now we're using this based on timestamps, if that makes sense. And how do we identify this being a manipulation? It's when it sweeps the previous day's high. You understand? If that makes sense. So like right now, if we're gonna go deep into this, right, I'm just gonna try using bar replay. We'll be dividing this current range. Let's just remove this because it's looking weird. Okay. We're gonna be dividing this range, our Monday range, into quadrants, right? Let's scale down maybe to a 15-minute time frame to have a clear view of what price is actually doing, right? So like right now, we would divide this into quadrants like this, if that makes sense. So we've divided our first range into quadrants, as you can see, right? The first one being Asian, right? So this would be our Asia range, right? The second one being our London range, third one being our New York, fourth one being our PM session, right? This is specifically for features and whatnot, right? So in simple terms, right, how does price behave within these ranges is pretty much fractal to each and every one of these individual days, right? You look to see price sweep the previous phases high or lows, meaning that in simple terms, if I was looking to trade within this range, right, reducing or removing bias from the idea, right, I would simply look, I'm gonna outline this and make it right. I would simply look to see price sweep. I would simply look to see price sweep the high or the low of the Asian range, right? That's the classic power of three. And then go the opposite direction. If we can break this down like this, right? Let's even do it like this. Yeah, now we can use bar replay, if that makes sense. Now we can use bar replay and then we can hide everything else. Let's go to the 5-minute time frame, right? So like right now, when we mark out this range right here as our true day range, right? This would be our London range, if that makes sense. So meaning that this would be a true day open, if that makes sense, right? So if we're gonna be looking for lower prices, right? We want to see price sweep the Asian high and then draw lower, if that makes sense, right? If we're gonna be looking for higher prices, we're gonna be looking to see price sweep the Asian low and then draw higher, right? But now here's the thing: the highest probability entries will tend to form in the third quadrant of London, if that makes sense. So we can rename this as London, right? And then now we divide our London session range or our London kill zone range into quadrants, right? And generally, the highest probability setups will form within this range right here. Because generally, once you go into the fourth quarter, this tends to be our reversal range, meaning that we look for the exact same thing to happen within the session that's happening on the high time frame. Kind of like price accumulates the first quarter, price sweeps the high within the second quarter, right? And then price draws lower within the third quarter, right? And then potential reversal can happen within the last quarter, moving price higher, right? So in simple terms, if I was to take a trade right here, right, I would anticipate price providing some form of an accumulation range or high within this range, right? Let's just see how price behaves. Let me add this right here, right? Okay, here we go. Right now we have this high right here, which is a Q1 high. So if I was to go short, I would want to see price sweep this high and then sweep that high, right, within the second quarter range. And then within the the third quarter, would want to see lower prices, right? But if I was bullish, I would want to see price sweep the previous low, right? Q1's low, and then sweep the Asian session low, if that makes sense, and then draw higher, if that makes sense. So let's just see. Okay, so you can see price has now swept the previous quarter high, right? And now it has also swept the Asian session high, if that makes sense, right? And in simple terms, this is basically my model. This is how I look to see price. Every day I'm looking for this specific characteristics to happen, right? And then what we're doing right now, I'm waiting for displacement, right? And then my entries would be within the third quarter of the range. And if that doesn't present itself, then I would regard it as a mistrade, right? If that makes sense. Let's see. So like now, if price closes below this candlestick, I would regard that as a breaker block and shift in market structure. Let's just see. Price has created a fair value gap right here, right? And usually when price does this right here, I want to see price close below it, if that makes sense, because this would make this an inversion fair value gap. So chances are there'd be a breaker above price within this range. Let's see. Okay, this is our new breaker, but we can still utilize that one. Price closes below. So in this case, if you can pay attention, we are within the third quarter of our range, right? And there's two ways in which you would execute a trade here, right? The first one, the minute you get this breaker like this, you execute your trade. You go short, right? The second way, you'd anticipate price drawing back into this fair value gap right here, and then you go short. The third way is you'd anticipate or wait for price to tap the breaker low and then go short, right? And if it doesn't provide any one of those components, then we regard everything here as a missed opportunity, right? Therefore, we did not get any trades, if that makes sense. And this is also extremely why multi-time frame analysis is key, meaning that as I'm observing the 5 minutes, I'd be also looking at the 1 minute time frame, if that makes sense, right? This is our breaker range. This is some PhD. Okay, this is our fair value gap right here. If price can take back into it, I would execute a trade with the expectation of price not closing above this breaker high, if that makes sense. But let's just see how price forms on the 5 minute, just to keep things simple. Let's just see how price behaves. Price draws lower. right? And what does it draw to? It draws to the Asian session low, right? So this would be pretty much a missed trade entry, right? And now here are the characteristics of Q Q4, right? If we can divide our quadrants into segments like this, right? If you can pay attention, the highest probability setups for Q4, if we're gonna be trading reversals, right, is price sweeps the Asian range low, it still sweeps Q1's low, right? So this is a setup on its own, right? But now price needs to create some form of displacements, meaning that price needs to create something like this, just for simple terms, something like this, and then create a breaker block, the same inverted structure right here, but we want to execute our trade within the fourth quarter of this whole entire range. So now let's just see that. Let me just move this lower. If price closes above here, would regard that as a breaker. Let's see. If price draws lower here, closes below this low, would regard this as our breaker. Price creates this, and chances are if it does this, it has pretty much provided an SMT divergence on EU. Let's just see. Can you remove this? Yes, we got an SMT divergence indicating high probability reversals, so we would regard this as our breaker. So as soon as price closes above it like this, you would go long, and if you can pay attention, we're within the fourth quarter of our range. You understand? If you don't want to execute like that, you'd want to execute on this fair value gap right here and then go long. And what's your target? It's the most recent high, which would be this one right here, if that makes sense. That's if you don't use risk to reward ratios. I'm personally not a fan of those, but yeah, let's just see. Price taps the fair value gap, and the rules are price should not close below the fair value gap if it's gonna remain valid, if that makes sense. Price keeps going higher and higher and higher and higher and higher. So that's simply how price books. And now if you can bear in mind, right, both setups happened, right? London was our manipulation, right? So this range right here would have been regarded as our manipulation, if that makes sense. So right now I'm gonna try removing everything. Let's just see. Nah, forget it. It's not working like that. The Asian session would have been regarded as our accumulation, right? And then New York becomes our distribution, if that makes sense. So this short setup that formed within this range right here, this one was our manipulation, sweeping sell side for distribution to see price move higher, if that makes sense, right? To simplify it, this is how we identify it, and then Q3 would be our distribution, if that makes sense, right? So right now I'm gonna try providing you another additional example just to make sure everything makes sense. Okay, so right now we're on NASDAQ, right? We got the ranges between our Asia high and our Asia low, right? So meaning that now this is our London session, right? We divide this into quadrants, if that makes sense, right? And our trades will be executed within this price range right here. And our target would be Asia low if price goes higher. Right now, if price is gonna sweep the Asia low first, our target will be the most recent high, right? But based on how price is looking right now, it's in close proximity to the Asia high. So we're anticipating some form of a range within this range right here. So let's see. Let's divide this into something like this. Okay, let's see. Okay, right now we've got this, which is the first quarter high, right? If that makes sense. So what we look for, we want to see price sweep Q1's high and then the Asian session high. And then we anticipate all that happening within Q2, which is the manipulation phase. So this whole entire range was our accumulation phase, if that makes sense. So like now let's just see. Price draws lower. Then we can move this to this. Price sweeps both. Can you see that? Price sweeps both. Then what we look for now is displacement. And our highest trades would be, we look to see price react off the third quarter of the range. This is where we take our trades, if that makes sense, right? So we're looking for displacement. Let's see. And when price creates a fair value gap like this, right, you generally want to see if on a lower time frame we have displacement. Let's go to the 1 minute time frame. And our displacement would be this right here. So this is our shift in market structure. That's our breaker block range, right? But we can go back to the 5 minutes. So if price closes within this range, I would actually be comfortable executing a trade within here, if that makes sense. Let's see, price takes us in and then let's see how it reacts. Continues drawing lower. An additional thing that you can also utilize to execute your trades if you want to scale in, how I personally approach it, when we are within the third quarter, right, I would divide this into quadrants too, right? And then if I'm seeing a potential entry within this range, which is the third quarter of the third quarter, if that makes sense, I would execute a trade. So yeah, in simple terms, even this right here, I would utilize this as a scale in, if that makes sense. So I would execute this as a scale in, and my drawn liquidity would be sell side. First would be this one right here, meaning that we're taking partials within this range. See, price draws lower, takes us back in. It hits the Asian range, right? And then now the beauty of it is that it hits it before the fourth quarter range, if that makes sense. Because generally, price will start reversing within this range, right? So if we were to get displacement here and a clear indication that price wants to go higher, then we'd execute that as a long, if that makes sense. Let's see if it presents itself. Price just continues going lower and then the session ends, right? So guys, hopefully you found this insightful, you found this helpful, and you found it enlightening. And if you like the video, you got any questions, just be sure to hit the subscribe button, smash the like button, right? Yeah.